Well, good morning. It's Sunday the 11th. Just finished getting our scans all together, get our portfolios all lined out, and wanted to give our monthly update on our smallest account that we manage. We use this account for educational purposes. It is a live account. It's not fake. A lot of questions about that. It's live. Uh, anyways, what we do every month is we're looking at realized and unrealized gains. So the numbers we want to focus on, this is a combination over here, 275.22. That's unrealized and realized gains. Last month, May 31st, up here, and here's June 30th. Here's the total. So here is the difference. Of course, positive, right? And that gain is 0.98%. But that's not the whole story. Because you have unrealized, we'll just use a U, and realized, right? The unrealized is a portion of this. The realized is a portion of this. So we're focusing on the realized. The unrealized makes no difference to me. So how you find these, if you know, each statement's going to look a little different depending on what firm you're with. E-Trade, TD Ameritrade, Tasty Trade, any of those brokerage firms that are out there, they all have different statements. So what we're focusing on is this number here. So that's the total amount of dividends. This is the smallest account that we manage, like I said. And then we're going to come down here. We're going to look at that. Those are your trading profits, 85.93. Now we'll take a quick look at last month, so we can see we averaged 58.23. Now this is a combination of 3 accounts that we show online. We don't show all 15 accounts because that would be pointless. What we're trying to show is the different size accounts. One's in the 20s, another's in the 30s, and the other one I think is close to 70. So we're somewhere in the neighborhood of 120 to 130,000 that we're showing that we're managing. So our focus is to try to hit 1%. Okay, that's our our bottom. We don't want to really go any lower than that. Now it happens like it did this month or last month because we actually hit 1.0675, which is equivalent to about 12.81 for the year. But in this particular account, it didn't quite make it. So we'll go down through it. So we'll take that 110.96, right? 10.96, and we'll add that to the 85.93. We come up with 196.89, right? So we'll come back up here. Now, we're not going to take, this is where people fudge the numbers a little bit, and we don't do this. We're going to take this total account value, right? That was on the 30th. So it turned into 275.22. So the difference between those would be the unrealized part. So the 196.89 minus the 275. So it's around $80, just round number. But we're going to divide this number, 196.89, because that's a combination of your dividends, right? And your trading profit. So we're going to divide this by the 28,194.45, and we come up with this number, 0.00698. But we're going to multiply that by 100 to get our percentage. So that comes up to 0.69 or 0.7% if you want. Okay, that was your overall gain, realized gain. So now we can just multiply this number by 12. You can see that you're still on track at 8.38. We're still well below that 12%, right? 1% would be 12. Simple math. We focus on that 1% because this is just a small account, right? But at 8.3%, I don't know what the rates are right now, but I think the last CD rate was 0.5%. So if you're putting your money into a bank into a CD. I'm telling you shouldn't. I'm just saying that there's much better ways to make money or to make your money work for you. At 0.5%, it's going to take you a long time to double your money. So I always focus on the rule of 72. So we'll take the 72, divide that by 8.38%, and it's going to take you 8.59 years if you can perform at $100 or $200 a month. Now, keep in mind, we do not add any money, right? No money is added here. So you would see, well, we'd have to open up another like cash report, but we do not add money to this account. Now, by adding more money, let me erase that. It's kind of in the way. If this right here, if we were to add money, so if you add money to this number, your yield would go down. If you subtract money from here, your yield would go up. So, or your time rate of return, it's still a yield, right? But your focus really needs to be on trying to hit that 1%. And how you do that is by staying small. People lose track of all the hype around people, you know, supposedly. Can't prove it because nobody will ever give you a statement. I'm showing you live statements here on how to make your money work for you. So it's a lengthy process, but it's a safe process because versus, I don't believe in stops when you're investing because my philosophy is when I buy something, I buy it for life. Okay, and I've done this for, well, 35 years, and I don't take losses because I believe that if a company is paying dividends, they're making money. Growth companies, they reinvest the money into their companies. So you don't, maybe the stock price goes up, maybe the stock price comes down. But if you're overloaded in one of these growth stocks and the bottom falls out, then if you've only got one option at that point, you have to sell for a loss because how are you going to make that money work for you? Because it's not working. If your money is sitting, and doesn't matter what the dividend amount is, we only target dividend paying stocks that have a $1.20 per year per share and above. So I mean, it could be $15 a year, which there are stocks out there that do that, but we don't buy 100 shares of those. We have risk management tools that allow us to defend our positions so we don't take losses. So we're looking at, as coming up here on Monday, which is tomorrow, after our scan, I think our scan had something like, let me take a look here. I think our scan for this week, we only have 3 CEFs, and if you don't understand what CEFs are, you should look it up. They're closed-end funds. Our scans show we're going to have 75, and we have to go down through them. That's the last thing, and see which ones that we actually own. So we would not buy those if they are positive, meaning they're above water. So, but in a nutshell, that's where this account stands. Now you can see this account live. Here it is right here. See 28/4/13. And I think the statement was June 30th, so it's 11 days later. So what do we got here? A difference of 28/4/69 versus 4/13. So it's down about what, $650. Looks like the overall yield is 4.82, right? I don't pay as much of attention to this yield number because as the prices continue to go up, this yield amount will get lower. What you need to be focusing on is what your minimum amount is. Like if you say, oh, I don't want any less than $2 a month, then you would focus on those. So when something drops like this one here, now let me back up a little bit here. CEFs, it doesn't matter what the yield is. We take CEFs no matter what because they're monthly payers. That money comes in faster. So you have a, they still have to meet other criteria, but that's the only thing that we allow to be lower. So $1 versus $1.20. So you see, you can have $2 per year. You won't see a lot of the high value, say a stock that's earning the 300 mark that may be paying $8.36, or something like GWW, which is Granger. It pays, I think, $6.46 per year. But because of the max shares, and these are small accounts, we don't get into, we have to manage our risk. We're not going to put too much money into any one stock, you know, that doesn't meet our criteria. So I think on this week's scan, because these are weekly scans, we only have, I think, what is it, ESS, I'm not even sure what that company is, but Granger, Lockheed Martin. There was only 3 that didn't, it wouldn't allow us to buy them on these small accounts. Now when you get up to, you know, 3, 4, 500,000, that won't affect, you know, you be able to manage your risk in those. But on anything under 100,000, you don't want to be going any more than 10% on max shares. And if you don't understand what that is, we are putting a book together. It'll be a step-by-step on how this system works, and there's several different strategies within it. But the strategy that we use here is we protect our money. We need it to grow. So this is money that you're never going to touch. You have to look at this in reality. If you know, if you're young and you've never invested before, this money is something you cannot touch, not even in an emergency. It's like, man, I really want that car. It's like, well, get a second job. You know, this is going to be important for the rest of your life if you want to have something to retire on, because whether Social Security is there or not, I'm not a fear monger. I don't really care if Social Security is there or not. That's just gravy on top. It doesn't matter to me. But a lot of people will, you know, need that money to survive on. So focus on, no, I'm getting distracted here. Need to get back to what I was talking about. But this is our focus, all right? We want to try to hit that 1%. We didn't make it this month. That's just on one account. But the overall, the 3 portfolios that we're showing everybody, it did. So some of these 2 of the other portfolios obviously did better to bring it up because the average had to be higher. But that's what you're looking at. Focus on those. We're looking at realized gains, and if you want to see more of what's actually going on, we go back months, okay? So you can see the progression. So this is so far this month. You can see dividends are not dividends are outpacing the profits, and you can tell if you follow the market at all that the market's been kind of flat. So whether we're at a top or not, I have no idea. I don't care, because if the market comes down, my dividends increase. If the market goes up, I start taking profits and the dividends come back down. So eventually, one of these accounts will reset them if they go over 100,000. The one closest to that would be around 70. But you can see each month since March that our trading profits have outpaced our dividends. The dividends usually coming in around the $600–700 mark per month, right? And that's all 3 combined. Keep that in mind. You continue to grow these accounts. Now remember, we're not adding external money. These things are growing by trading profits and dividends. We're showing you this can be done. You adding money to your account will actually bring your yield down. So you got to keep that in mind as well. So, you know, when you want to mess around with your numbers, if you have a question on it, give me a shout. I'll help you out with it. Sometimes it can be confusing. But that's it in a nutshell. Get ready for next week. Nobody has any idea what's going on. I don't either. But what we try to do is make money and increase it each month and not take losses. That's the name of the game. Anyways, have a good rest of the weekend. We'll see you later.